Kentucky grain farmers just hit rock bottom. Cash receipts are projected to crash 20% from $2.9 billion down to $2.3 billion in 2025. But here's the number that should terrify you: net farm income. It's only rebounding from $2.4 billion to $3 billion because of government bailouts and crop insurance payouts, not actual farming. Meanwhile, farm bankruptcies surged 70% nationally in the first quarter of 2025. Commercial Kentucky crop farms that were printing money in 2021 are now staring into an abyss. Jerry Pierce, coordinator for Kentucky Farm Business Management, put it bluntly: "We've come to a cliff and can't see the bottom." And Governor Andy Beshear, he's warning about real headwinds while federal tariffs crush rural communities and USDA funding remains frozen. Let me show you exactly what's happening to Kentucky agriculture right now. Kentucky farmers are trapped in a price-cost squeeze that's destroying livelihoods. Grain crop cash receipts are projected to drop nearly 20% this year. Corn and soybean prices have crashed to levels not seen since 2018-2019. For context, China traditionally bought 25% of all U.S. soybean production. Then tariffs hit. Chinese buying stopped cold, pushing soybean prices to unprofitable levels. Commercial Kentucky crop farms in the Farm Business Management Program had average gross income of $900 per acre last year. Operating expenses, $816 per acre. That's just $84 profit per acre before you account for land payments, equipment, or living expenses. And 2025 looks worse, much worse. Grant Gardner, UK Extension Grain Economics Specialist, explained the brutal reality. Another year of near-record grain production, both in the U.S. and the rest of the world, puts Kentucky producers in a similar situation as last year. Translation: oversupply, depressed prices, and nowhere to sell. But here's what the headlines aren't telling you. While grain farmers are bleeding out, Kentucky's livestock sector is booming. Livestock receipts are expected to increase by 17% in 2024, driven by strong cattle prices and continued growth in poultry. Kenny Burdine, UK Extension livestock economist, reported that livestock now accounts for 65% of projected ag sales in 2025. For many years, crops and livestock were roughly equal. Not anymore. The market share has widened considerably, creating two completely different agricultural economies in the same state. But don't let the livestock numbers fool you. This isn't a success story, it's a warning sign. Kenny Snell, UK farm management specialist, explained, while we expect a rebound in Kentucky net farm income from $2.4 billion to around $3 billion in 2025, this is largely due to an increase in government payments and crop insurance proceeds, not market strength on the crop side. Kentucky farmers aren't making money farming, they're surviving on federal bailouts. Kentucky's farm economy is facing three deadly forces simultaneously. First, the national bankruptcy surge. Between April 2024 and March 2025, there were 259 Chapter 12 farm bankruptcy filings nationwide. The first quarter of 2025 alone saw filings nearly double compared to 2024, 88 filings versus 45. Ryan Loy, extension economist at University of Arkansas, warned, "We've already beat last year in terms of Q1 national filings." Once you see this on a national level, it's a clear sign that financial pressures we saw before in 2018 and 2019 are re-emerging, and it's accelerating. By mid-2025, farm bankruptcies surged 70% compared to the same period in 2024. If current trends continue, 2025 could see over 1,000 farm bankruptcies, the highest in years. And this doesn't even count Chapter 7 liquidations, where farms are completely sold off to pay creditors. Second, the price collapse. Corn prices have crashed about 50% since 2022. Soybeans are down 40%. For Kentucky grain farmers, this is catastrophic. Jerry Pierce laid out the nightmare. We were seeing the highest net farm income ever in 2021, but now we've come to a cliff and can't see the bottom. Commercial crop farms have been profitable over the last 5 years, but most of that income came in the first 3 years. Now, gross revenue has dropped considerably, driving profit margins into the basement. Pierce warned that this pattern will likely impact future conversations with farm lenders. Translation: banks are getting nervous about lending to grain farmers. Third, the working capital crisis. Lenders reported that nearly all of our farm customers are realizing significant losses in working capital. Federal Reserve Bank of Chicago data shows repayment rates for non-real estate farm loans hit their lowest point since early 2020. In the first quarter of 2025, 39% of bankers observed lower repayment rates compared to a year ago. Not a single banker reported improvements. Ashley Arrington from Ag Resource Management put it starkly: when we were asking why these people haven't applied with us again, one of the biggest reasons is they were no longer farming, and that's the largest amount I've really ever seen in my career. Farmers aren't switching lenders, they're quitting entirely. So what's Governor Beshear doing about this crisis? In December 2025, he warned we're going to have some real headwinds that we have to deal with. The federal tariff policy is impacting Kentucky's economy. It's increasing prices for our families everywhere, including the grocery store, and it's impacting economic development across America. He's right, but warnings aren't solutions. The state did pass HB 703, which cost $230,000 for expanded Kentucky Farmland Retention Tax Credit Program administration, and HB 111 established a Healthy Soils program costing $258,100 for technical advice and soil health assessments. But these are band-aids on a hemorrhage. When the federal government shutdown stretched into November 2025, causing SNAP benefits to be delayed for 645,000 Kentuckians, Beshear declared a state of emergency. He sent $5 million from the Rainy Day Fund to Kentucky food banks and deployed the National Guard to staff distribution centers. That's leadership in a crisis, but it's reactive, not proactive. And the farm economy crisis requires proactive solutions that Beshear simply can't deliver alone. Federal tariffs, USDA funding freezes, and commodity prices are beyond his control. Now, let's talk about how the federal government made everything worse. Congress passed the One Big Beautiful Bill Act in July 2025, which included about $66 billion in agriculture-focused spending. About $59 billion was earmarked for farm safety net enhancements. Sounds good, right? Here's the problem. That aid won't arrive until October 2026. Farmers facing bankruptcy in 2025 have to somehow survive another full year before help arrives. And even then, economists at University of Illinois calculated that with federal aid, corn and soybean farmers would still lose between $23 and $118 per acre. The relief is a band-aid on a hemorrhage. Then there's the tariff disaster. China promised to resume soybean purchases at levels slightly below those of recent years as part of Trump's trade deal. But by mid-2025, China showed no signs of actually buying. Meanwhile, farmers who switched from soybeans to corn, wheat, and barley are now seeing those commodity prices collapse too because of oversupply. It's a death spiral, and federal policy caused it. The farm crisis isn't staying on the farm. It's destroying entire rural communities. Equipment sales are collapsing. Tractor sales down 13% year over year. Combine sales down 48%. Input suppliers, equipment dealers, feed mills, veterinarians, everyone tied to agriculture is hurting. Stiles from Agricultural Finance warned there's a downstream impact on other segments in ag industry. Your input suppliers, your equipment dealers, anybody who provides a service to farmers is impacted by this too. Ryan Loy added, if the farmers are hurting, those communities are going to hurt too. And Kentucky's forestry sector? Economic contribution declined from $13.9 billion in 2023 to $12.3 billion in 2024. Several mills closed, including the second largest mill in eastern Kentucky. The value of an acre of harvested timber fell from $22,308 to $19,468 in 1 year. Rural Kentucky is bleeding jobs, tax revenue, and population. The government payment trap, 9:30 to 10:30. Here's the most disturbing part of this crisis. Government payments as a share of GDP are approaching levels not seen outside the 1980s farm crisis and the first Trump presidency. Kentucky net farm income is only rebounding because of massive federal subsidies, not market success. Farm Action, a nonpartisan farm advocacy organization, warned recurring bailouts for commodity crops aren't bad luck or short-term trade issues. They're symptoms of a farm economy built on overproduction and dependence. These bailouts are also changing who owns farmland. Ill-conceived subsidies drive change in agricultural land ownership as hedge funds and wealthy investors seek assets artificially propped up by government guarantees. Too often, the entry of hedge funds and larger farming operations raises prices, increases farm consolidation, and pushes young farmers out of markets. A generation of Kentucky farmers is at risk of losing not just their livelihoods, but their land to Wall Street investors. The 1980s parallel, 10:30 to 11:30. If this all sounds familiar, it should. During the 1980s, American farmers endured a crisis more severe than any since the Great Depression. The causes? Failed government policy, accumulation of debt, high interest rates, falling commodity prices, extreme weather events. Sound familiar? Today, farmers face many of the same challenges. And just like the 1980s, Chapter 12 bankruptcy, introduced in 1986 specifically for farm reorganization, is surging. Tyler Oxner from American Farm Bureau Federation warned, if trends continue unchecked, 2025 may be remembered not only as a year of rising bankruptcies, but a year in which America loses a generation of farmers. The South skews older in its farm population. Many operations depend on generational transfer for continuity. When bankruptcies erode farm equity, succession becomes impossible. Older farmers nearing retirement may have no heirs financially able to assume the risks. The result? Land sold outside the family, sometimes outside agriculture altogether. Outro. Right now, Kentucky grain farmers are facing serious financial stress heading into 2026. Government payments and crop insurance are the only things preventing total collapse. Governor Beshear can't stop federal tariffs. He can't force China to buy soybeans. He can't control commodity prices. But he can prepare Kentucky for what comes next. The state has options: support for farm credit programs, expansion of direct-to-consumer sales platforms, investment in agricultural diversification, mental health resources for farmers in crisis. But time is running out. More than half of all U.S. farms won't turn a profit in 2026, according to Farmer Mac. Ashley Arrington summed up the desperation. Last year, cash reserves were already depleted. Some farmers who should have addressed problems then kicked the can down the road, and now many are too far upside down for lenders to help. Kentucky's farm economy hasn't just collapsed, it's free-falling. And unless Governor Beshear and federal officials act decisively, rural Kentucky faces an economic disaster not seen since the 1980s. The question isn't whether Kentucky agriculture will survive, it's whether family farmers will still be the ones working the land when the crisis ends.